9 Eastern, only on CNBC.
All right, we're back. Livornia, Battipaglia, Bowyer. Joe, this is a tough issue because you mentioned before foreigners are investing, but Mr. McKinnon, Professor McKinnon says foreigners are investing their excess dollars only in U.S. Treasuries. So paradoxically, even while we're running large budget deficits, creating more treasuries, which we are, the deficit this year is probably going to be $500 billion, he says there's a shortage of treasuries. And the reason he says this is because that's the only thing foreigners are buying. I assume implicitly he's saying foreigners are not buying corporate bonds and they're not buying stocks. They're just buying treasuries. You agree with that?
Is that me, Larry?
Yeah.
Oh, I'm sorry, the other Joe. I'm sorry. No, I don't agree with that because I think they already hold a lot of treasuries, and what they've done is they're diversified, and you see them buying corporate bonds, you see them buying equities. So it's not just a treasury story. I think it's you
then
still see data.
Why isn't there a shortage, Joe? In all seriousness,
you're right.
If there's a shortage of treasuries, which is what he argues, and I think everyone would agree, that's because that's the only thing they'll buy. There's a flight from risk.
Right.
Why isn't there a shortage of corporates? Why isn't there a shortage of why isn't there a shortage of subprime mortgage bonds if international people are investing there?
The one thing Professor McKinnon was right on is that there's general risk aversion. Investors are only want to buy things they know how to value, and treasuries are part of them. But we are starting to see other pockets of the market improve, and I think, again, you have to separate the fact that this environment is unusual because it's a financial crisis where bank balance sheets are under a lot of constraint, and that's why there's been demand for treasuries, and it's been worse recently because we had to go over quarter end, which ends today, obviously.
Joe Battipaglia, can the American stock market rally in a significant, sustained way without a dollar rally of some significance?
No, I don't think it can, because what it tells us is that capital is going to where it can get a better return, and as long as the signal is that it's elsewhere but the United States, then we will be an underperformer as far as GDP is concerned, as far as productivity is concerned, and we become a bigger debtor nation, which becomes more burdensome. And quite frankly, the only reason why they hold these treasuries is to try to keep selling us stuff, but that's just because they want to send it into here as opposed to investing in this country. So we are in a precarious state as long as you let this currency continue to drift lower.
The one thing I agree with a lot of what Joe has said, but on the last point I do disagree with. If you look at U.S. productivity performance, we certainly outperform Europe, and we certainly outperform Japan. So I really don't think the U.S. economy...
But you're still slumping on productivity, and the Japanese-style bailout is what we're trying to mimic here, which suggests that our productivity will further suffer while we mismanage the asset rebalancing.
But I don't think... But Joe, I think, with all due respect, I mean, we're not Japan. Japan had a lot of things go against it, and the problems that festered for a long time. Slow with rate cuts,
but you
huge
can't be
appreciation of the currency.
In other words, you can't go halfway.
I don't think we're here this time around.
Jerry,
no, but I don't think we are.
Is Jerry still there?
Yeah, I'm here.
I miss you, Jerry. I couldn't see you on the screen. What would have happened if Secretary Paulson got up today and announced a massive corporate tax reform plan, taking the top corporate tax rate down 10, 15, 20 points, reducing the corporate capital gains tax rate? What would have happened?
The dollar would have rallied like crazy. Look, why does a Japanese investor or a Singaporean investor or a Chinese investor want a dollar? They want a dollar because that's a ticket to ride in the U.S. equity market or bond market. So the reason that we have been the reserve currency of the world is because we've had the most free market, most pro-property rights, most non-regulatory economy in the world.
And a stable currency
at the time. The dollar is an effect of that, not the cause of that.
We have to leave it there. Joe Livornia, Jerry Bowyer. Joe Bowyer, Joe Battipaglia. Sorry about that, gentlemen. I want lower the corporate tax rate and boost the dollar. That is a positive. Goldilocks will return. So will we, with my last word.